You probably heard many headlines about the interest rate hike and more to come in less than 2 weeks when the Bank of Canada is going to make another announcement. There are many buyers with the mindset of wishing the market would keep crashing and thus make the real estate market more affordable. But on the other hand, for the market to go down, interest rates are going to skyrocket. Is this really making it more affordable? Let's take a look right after this. Hi there, welcome back to AV Team Real Estate channel. I'm Antonio, a local real estate agent in the Greater Toronto area. If you don't know by now, I post all related real estate content in Toronto. If you find this helpful, all I ask is for a little support. Please like and subscribe to our channel so that I can keep creating videos just like this. And of course, if you're looking to buy, sell, or invest, feel free to book a call with me using the first link in the description. Or simply call or text me at the number in the screen and I'm glad to help. Do you remember earlier in the year when the market was extremely hot? The seller was in the driver's seat with many offers on the table. As a real estate agent, we don't even think about a property not selling, but instead how much more it will be sold. Many potential buyers had lost hope and were fed up with the bidding war. When I was working with a handful of clients who were so upset that prices would keep going up, they finally exit the market completely. The majority of them think about hoping for a price decrease so they can buy it when the price is lower. These clients have been waiting for this exact moment ever since prices started to significantly drop. Now what do? Actually, they left the market entirely. They are concerned about buying anything that may depreciate in value. If that sounds familiar to you, it is really a popular mindset in today's market. However, if we take a look at the affordability side of the equation, when the prices drop and the interest rates go up, the affordability doesn't change much. As an example, let's pull the mortgage calculator from Royal Bank. Let's say that we use as an example a mortgage for a condo apartment of $600,000. One of the main reasons the market was insane in the beginning of the year was due to low interest that was almost next to zero. Borrowing money was so cheap that there was a lot of demand and a bidding war. And therefore, we saw one of the fastest price increases during the early days of the year. For simplicity's sake, let's use the 25-year amortization period and assume that the interest rate was close to 2.5% during February when it was at its peak. Using the mortgage calculator, the monthly payment in February on a fixed 5-year term is close to $2,687.80. And let's say we use a standard 20% deposit. That would be around $120,000. If you were a potential buyer knowing that the market had currently come down and by a significant chunk, you would be extremely happy now, won't you? Let's say the condo apartment that was $600,000 earlier and have dropped to $480,000. Assuming it is the same condo apartment in the same area, that would be an awesome 20% price reduction. So after taking it to the bank or mortgage advisor, it most likely would be very disappointing to learn that the monthly payment went even higher than it was at the peak. If we calculate the monthly payment at the current rate right about 5.54% for the same 25 years of amortization and a fixed rate for 5 years, then it is currently at $2,941.07. This is the reality that the price has come down, but the interest rate has made it even less affordable. This will be something to think about. For a monthly payment to even have a benefit, the price drop must be much more significant than the interest rate increases, since the interest would need to be increased in order to reduce the demand and the price. I suppose the narrative about people wishing for the market to crash also needs to be aware of what they are truly wishing for. Of course, there is a big benefit to the deposit because it would have been much less due to the lower purchase price. However, the higher interest rate would make the buyer's purchasing power less than what they could have qualified for prior. With regard to the interest rate, it would appear that we may address one issue by making the price lower while creating the other ones. In the long run, I say that it is beneficial for buyers to take the lower purchase price with a higher interest rate than the higher purchase price with a lower interest rate. The simple answer is that the interest rate could change in the future, and we tend to be more flexible in Ontario, where the interest rate term could be as low as 5 years, and the purchase price rarely drops unless something catastrophic happens, such as a pandemic or a big recession. Now, if you are one of the many buyers that has the mentality that the prices could go much lower, how much lower can it get? Nobody knows for sure, but the question to ask yourself is how much lower it can go to overcome the higher interest. As previously discussed, if the interest to price ratio drop balance out, it did not help affordability or how long you will sit on the sidelines. Remember, while waiting, the rental market has gone wild for the past 6 months. For a matter of fact, it is record year for the highest increase in rent for a long time. Fast forward to today, the sales were down almost 50% and many properties were either terminated or taken off the market, and the psychology went the other way. The seller have been exhausted, and for those that needed to sell, they already had to sell it for a much discounted price. And for others, I will assume that they would rather rent it out for now so that they can buy some time and see how it goes in the future. The most beneficiary group will be the ones that have cash and don't require a mortgage. That way, the interest rate won't be even a factor and they could find a good deal in the market. The other group is the move-up buyers, especially moving from a condo to a freehold property, since the condo market withheld the price the most while freehold property with larger values dropped the most. It is a confusing market, but there are still possibilities for those that could take advantage of this unusual type of market. Anyway, this is a short video from my own opinion and some updates about the current real estate market so far in October. If you have any questions or feel like talking to me, feel free to book a call with me using the first link in the description, or simply call or text me at the number on the screen and I'm always available for a chat. I hope you have a wonderful day and I'll see you in the next video.